I think that the challenge for China obviously comes from not just the protests and the slowdown of the economy, but the real estate sector. However, if you strip out the real estate sector, which is certainly going to continue to be very weak in 2023, the reality is that the technology sector, the services sector even, is likely to show a much better performance in 2023, certainly than 2022, because we have behind the lackluster profits that have just been published. Industrial profits are likely to continue to be relatively weak. However, we kind of forget that in China, while we speak, there are sectors that are growing 20, 25%, and that will continue to do so. So I think that investors need to take a long-term view and be very diligent about deciding which sectors to invest in China. It's not going to be a year of looking at an index. It's not going to be a year of looking at being passive as an investor, but looking at active opportunities in sectors that are certainly going to continue to be very strong. And I think that tech is one of them.
Have we underestimated the effect that China and the ultimate direction of its economy is having on the rest of the world? Because, of course, when we had this huge growth phase with double-digit growth in China, I think we almost started taking for granted it was providing the X factor on global growth as well. Are we underestimating the negative effect it could have on the broader global economy?
I think we are. I think that we thought that the slowdown in China was not going to have a ripple effect on the rest of the world economy. I think it is very evident in Germany, for example, with exports, and with so many other economies in Latin America as well, not just from an export perspective, but also from the perspective of financing of investment projects. The slowdown in China is much more significant and has a negative effect on the global economy. So if we can say that in 2018 to 2020, China provided a multiplier effect on the global economy, what we can certainly say is that in these years of slowdown, it is generating a dividing effect. However, we cannot forget that in the Eurozone and in developed economies, the slowdown in China is working to a certain extent as a stimulus, because if you think about it, much lower consumption of commodities from China is helping developed economies maybe pass slightly close to recession, but not in recession. So that is also, let's say, an unexpected positive, but certainly does not even start to offset the negatives generated in trade, generated in exports globally, and certainly also in financing of emerging economies.